What are the 5 key events at next week?
Next week is set to bring key macro data, more earnings reports, and several Fed speeches as markets continue to digest the April FOMC decision. Investors will be watching whether earnings momentum can keep the rally intact if inflation or geopolitics become less favorable.
First, let us talk about macro data. Look at ISM manufacturing PMI and related indicators early in the week. These will help gauge manufacturing conditions after the latest Fed meeting and recent energy volatility. A stronger reading would support the soft landing narrative, while a weaker reading could point to slower industrial activity. Then, initial jobless claims later in the week. Claims data remain a useful real-time read on labor market conditions. If claims stay low, that would support the view that the labor market remains stable.
Second, Fed and policy. Several Fed speakers are scheduled after the April meeting, but there is no full FOMC meeting next week. Markets will likely listen for any confirmation that officials remain data-dependent and cautious about the pace of easing in 2026.
If speakers sound more hawkish about inflation persistence, that could weigh on rate-sensitive assets. If they treat recent price shocks as temporary, risk appetite could hold up better. Investors will also be looking for any comments that help frame the policy path after Powell's current term.
Third, earnings calendar. Earnings season is moving into its later stages, with a smaller group of technology and industrial companies still scheduled to report. The market will focus less on headline beats and more on guidance, especially around AI demand, margins, and supply chain conditions.
Strong guidance could help broaden the rally, while cautious commentary may trigger selective profit-taking. In other words, the next leg of the market move may depend more on outlook than on the reported quarter alone.
Fourth, market narratives. Some investors continue to favor defensive positioning when valuations look stretched, while others remain focused on long-term innovation themes such as AI. Value-oriented investors are still likely to emphasize earnings quality, valuation discipline, and balance sheet strength.
These perspectives suggest a market that is still being driven by earnings, but not free from macro risk. That balance makes next week important for both growth expectations and policy expectations.
Fifth, key risk setup. The biggest surprise would be hotter inflation data or more hawkish Fed rhetoric, which could renew concerns about rates and pressure growth valuations. A more supportive scenario would be continued earnings beats combined with stable labor data and no fresh inflation shock, which could help the rally broaden further.
Oil and geopolitics remain additional swing factors, so sentiment could shift quickly if energy prices move sharply again. Overall, next week will test whether fundamentals can keep anchoring the market after the latest record highs.
Leave your comments, subscribe BWS channel, and see you next time.